Okay, good morning. It's a pleasure to be here this morning with you all. And although I wish, like some of you, that we were all doing this in person, it's great to join you virtually. Thanks for all of you for taking some time to catch up with this. For my portion, I'm going to be covering a little bit about what we're seeing in the financial housing markets as it relates to multifamily housing and single-family housing sectors, and also how the financing space is reacting during this COVID pandemic, from our view anyway. And a few things of interest as it relates to where we're directing some of our resources this year as a result of the pandemic. Next slide. So just for those of you who may not be familiar with CHFA, our organization, the Colorado Housing and Finance Authority, is the state's housing finance agency. There's one in every state. And we were established by the General Assembly in 1973, but we're not a state agency. We were created as an independent authority with the ability to raise capital in the capital markets and then use that monies to support affordable housing, whether it's single family or multifamily. Although we're not a state agency, we are governed by a board of directors that's appointed by the governor and confirmed by the Senate. So that's sort of our tie back to the state. But one thing that's unique about CHFA, of the 50 states, there's probably only 5 authorities that have economic development activities as well. In 1982, when the economy was struggling, much like today, CHFA's authority was expanded to be able to use bond proceeds that were raised in the capital markets for economic development activities. So we have focused on single family, multifamily, and small business. And our goal is to make sure that we're meeting the needs of the entire housing spectrum, from homelessness to homeownership and the jobs that support each of those AMI levels. Next slide. Let me talk a little bit about what we're seeing in the rental housing market. A lot of people ask me, what's going on? Is the market slowing down? Are we building units? Are things moving forward? Have things sort of stopped because of COVID? This slide is meant to show you a little bit about what's going on. And the way to summarize it is there is still a lot of activity going on. There's a tremendous need for affordable housing, and the activity continues. So the first little circle that you see sort of just talks about the number of units that have been supported year to date through July 31st anyway, 3,141, and those are predominantly low-income housing tax credit multifamily units. But to give you a sense of sort of what it looks like today versus last year, the next circle shows you that last year for our state tax credit and 4% low-income housing tax credit round, we had 21 letters of interest from developers seeking 4% in state tax credit awards. This year, that number was 45, so it more than doubled. So that tells you that there's still a lot of optimism from the developer perspective in terms of opportunities for building affordable housing, which is good because that, as you know, is a great need throughout the state, whether it's a rural region or a metro region. There's a significant need. The next circle shows you the 10,673. Those are the number of units that have already received an award of tax credits, whether it's 9% competitive or a 4% state tax credit award, that are under construction. They're moving forward, they've received their award, but they just haven't placed in service yet. So that's a number of units that will be coming on to the state, throughout the entire state over the next several months, and that's good. One of the things that we're finding out is that in the tax credit equity market, things have slowed a little bit. The investor market is still strong. Investors are paying roughly 91 cents on the dollar for low-income housing tax credits. And on the state tax credits, about 70 or 71 cents. So that's still pretty strong. But there is sort of a slowdown as the new CRA regulations are starting to come out. Investors are starting to try and figure out where their monies will be best invested. I think what we've heard is that more of the deals that are mixed income or affordable housing incomes levels that go from 20 to 80%, those are slowing down or could slow down a little bit. But for the most part, the investor market is strong, but just watching. What I want to say on this last circle, the number 2, that actually is some good news in that what it tells you is that in our portfolio of multifamily loans that CHFA has, there's really only been one project that has 2 loans that has requested forbearance during this period from March on. That's significant because it tells you that most folks are able to pay the rent in the first 3 months. But as you just heard from Allison, the concern is whether or not that's going to be able to continue and whether properties and residents will be able to continue that going forward, given the pandemic is going to continue for the next few months and longer. So thank you for that. Next slide there, Philip. On the single family and homeownership side, it's a little bit of a different story. The production side is still very strong. As a result of COVID, what happened is the interest rates have dropped significantly. So the first-time home buyer market is still very strong. The need for down payment continues. And so you can see year to date, we put in roughly $60 million in down payment assistance to support borrowers trying to get into deep home ownership. This year, because we require home buyer education for every loan that comes to us or actually even goes to another lender, you can access it regardless. We've had to go to online home buyer education, and we are paying for that. So anyone who needs home buyer education that's seeking home ownership, you can access that through our distributors. And then the single family home ownership market, that's where we're seeing some significant numbers in terms of delinquencies. That 4,077 represents about 13% of CHFA's single family portfolio that has requested forbearance. As the CARES Act came out early on in March, there were a number of borrowers who needed to request forbearance, and so that's still very high. It's dropped a little bit since last month. And the number you see on the last is the number of borrowers from that 4,077 that, even though they've requested forbearance, are still making some sort of payment. That's a good number, but that number has dropped from roughly 3,000 borrowers who requested forbearance and were making some sort of payment to 529. So what that tells you is that the monies that have come out to be able to support paying your mortgage are starting to dwindle or wear down. And so what we're looking at is in September and October might be significant months for us as it relates to continued forbearance, foreclosure, and counseling. So that's what's looked like in the homeownership market. Next slide, please. I want to touch base on a few things. Last year, one of the most significant things we heard throughout the course of the stakeholder engagement sessions was the need for small, affordable multifamily housing. So not the 50 or 70 or more than 100 unit properties, those that serve residents of 20 or fewer. So in partnership with the Division of Housing, we've been exploring what we're calling the SHIP program, the Small Housing Innovation Program, to be able to provide financing either directly or to support a bank that will provide financing to support developments that are 20 units or fewer. And there's a big need for that in the rural markets especially, but also in some of the urban neighborhoods here in Denver. But also technical assistance was a huge request in how to navigate getting through and structuring a deal that's 20 units or fewer. They're harder to do, there's fewer resources available. So we're gonna add a technical assistance component through a number of partners, including DOH, to help us through that. And then the other one was a preservation program for single family homes. As we're into this COVID environment, a number of single family homes are gonna be sort of delinquent in forbearance and maybe have to go through foreclosure. We've established what we call the CHFA First Look program, and what that really is about is giving nonprofits and CDFIs and land trusts the first look to buy those single family properties before they go into foreclosure and are sold to market rate developers perhaps, or market rate buyers, to make sure that we ensure that they remain affordable for the long term in perpetuity. So that's been successful. We've actually done a couple of closings already, and just did a bid for 6 single family homes to a variety of partners throughout the state, 48 nonprofits that have the opportunity to bid on those properties to preserve single family housing for the long term. Next slide. One other thing I want to point out, this is, so last year CHFA started really investing itself in communities, starting to embed employees in the communities that we serve. We established a community relationship manager in the San Luis Valley, Southern Colorado, and the Western Slope. We had offices there. But this year we're also going to add one in Durango to cover the Four Corners region. So that job actually is posted. We'll be filling that over the next few months. It's a little harder to interview during this COVID environment, but we are committed to doing that because that helps us understand the needs of the communities, particularly in rural areas, in a much better way. And so we're committed to doing that. The last thing I want to say on this slide is I think it's important for everybody to know that the level of communication among the interagency partners that are funders in the affordable housing space, whether it's the Division of Housing, the City of Denver's HOST program, the Colorado Health Foundation, Enterprise, there's a lot of funders that are now talking on a regular basis to make sure that we're directing resources to where they're needed the most. And that has been wonderful. That's one thing that's easy to pull together a Zoom call to get all of our partners on a weekly basis, and that's been happening consistently. Next slide. And then finally, just CHFA for a long time has had a corporate giving program where we support nonprofits through sponsorship requests that they make. This year, we had to sort of reprioritize where we give our sponsorship dollars, and you can see the areas of focus were to support nonprofits that have had the greatest impact in supporting members of the community that are impacted by the COVID pandemic. That includes shelters, food banks, and nonprofits that provide rental assistance and mortgage assistance. And so we added an additional $500,000 to our corporate giving programs this year to support COVID-related areas in these priority areas. And there's a number of nonprofits that have the ability to request grant dollars and support dollars from us, particularly in these three areas, to help make sure that they're carrying out their mission and serving their communities in a greater way. So I just wanted to make sure you knew about that and can talk to us about that if you have any questions. That is all I have for this morning. And so what we'd like to do now is open it up and have you ask any questions that you have on any of the three panelists that have provided comments this morning.